In the news this week, there's a lot of data coming at us, so let's get right into it. Before we begin, remember to like this video and subscribe for more economic updates. The Federal Reserve's first interest rate cut in more than 4 years is 2 weeks old. Attention now turns to how the world's most influential central bank may proceed from here. Based on the Fed's latest summary of economic projections, policymakers expect to lower rates by 50 more basis points before the end of the year. But what actually happens when the Federal Open Market Committee meets again in November and December will depend largely on the data that emerges in the weeks preceding each gathering. As for the latest round of jobs market updates, those begin on Tuesday when the Labor Department releases the August Job Openings and Labor Turnover Survey, also known as the JOLTS report. The August report is expected to show there were 7.7 million job openings as of the last day of August, which would be about 30,000 more than in July. However, job openings overall are running about 35% below their peak reached 2.5 years ago. Next comes the National Employment Report for September, which is set to be released on Wednesday by payroll processor ADP. Economists expect the report to show that 120,000 private sector jobs were added in September, which would be about 21% more than the 99,000 jobs added in August. August was also the 5th straight month the job creation in the private sector declined, according to ADP's numbers. Rounding out the week's jobs numbers will be the government's headline non-farm payrolls report for September, which is set to be released Friday by the Labor Department. The consensus forecast says 145,000 jobs were added in September, which would be just 3,000 more than in August. As for the actual unemployment rate, that's projected to remain at 4.2%, which would make September the 4th straight month the official jobless rate has come in over 4%. Job growth has slowed considerably from the first part of the year, while job growth averaged a little more than 225,000 per month during the first 5 months of 2024. The average monthly gain from June through August fell to roughly 116,000. The Institute for Supply Management also checks in this week with updates on the health of the entire nation's manufacturing and services sectors. On Tuesday, ISM is expected to reveal that its Manufacturing Purchasing Managers Index came in at 47.7 in September. That would be a half point higher than August's reading, but still solidly below 50 and in contraction territory. If ISM's manufacturing PMI for September does land anywhere below 50, it will mark the 22nd time in the last 23 months the metric has indicated contraction. Then on Thursday, ISM will be back to issue its services PMI for September. The consensus estimate is for the index to come in at 51.5, which would be the same as the figure for August. Overall, the nation's services sector, as measured by PMI, has done a better job than its manufacturing counterpart at staying in expansion territory. Still, services PMI remains wobbly, landing below 50 in 2 of the previous 5 months. That's it for now. Make sure to join us on Saturday when we go over what actually happened. This is Devlin Steele for Augusta Precious Metals signing out.